Greg Braca, we got GDP growth of 1% in the fourth quarter. Is this the kind of slow growth that we can expect going forward?
We do think it's a little bit of an outlier longer term. And looking out, we do think that we're going to begin to see, notwithstanding the choppy start to 2016, we're going to start seeing better growth. Now, better growth, I think, is a new definition these days. What does that mean? I don't think anyone's pointing, at least in our economics group or the way we see the business, it's going to be 3, 4, 5%, given a lot of the headwinds, the strength of the U.S. dollar, the weakness overseas, commodity, everything else. But we are seeing a lot of strength continuing to be exhibited in the consumer segment. We do see that there is going to be investment from the corporates. M&A continues to be strong. Real estate continues to be strong. So 2 to 3% growth is a reality.
All right, let's talk about the consumer. The consumer has a job. The job numbers have been good. They have low gas prices. So will the consumer start spending in the spring, taking money out of your bank, TD Bank, and go buy things?
So I think if you go back to the last couple of first quarters, you saw strong first quarter numbers, you saw weak first quarter numbers, then you saw items rebound in the second and third quarter, and you saw strong growth, GDP in the second and third quarter. The last couple of winters, we blamed it on weather. Well, we didn't have that excuse this year, but certainly there was a risk-off environment for January and February. But we do believe you're going to see the strength in the consumer really take shape. Matter of fact, today ADP released jobs number. Later this week, we've got the Department of Labor coming out with the jobs numbers, and I do think you're going to see pretty strong results continue. I do think that bodes very, very well for the growth of the economy going forward.
And will that consumer buy houses or buy some homes? Will they buy places to live this spring? Because the weather's been nice and we're heading into home buying season.
We are, and I do think even if you talk to the major home builders, matter of fact, we did a survey across a number of industries of CFOs, a couple of hundred in December, and it was decidedly that folks are viewing, businesses are viewing, consumer will spend. When it gets to real estate, we are beginning to see some of the retail home builders back in the game, not just the urban multifamily towers going up. So we are starting to see home formation and construction starts.
All right, so individuals are going to be borrowing to buy homes. What about businesses? Are they going to start opening up the spending spigot to expand, hopefully?
Yeah, so I think you're going to see investment in technology, in infrastructure, in cyber security. All of those things very much came back with positive indications in our survey. But additionally, I think what you've seen over the last 18 months is just the strength of the M&A market, and companies are flush with on their balance sheet, flush with liquidity, and they've been putting it to work, and that's been borne out so far in the M&A market.
Still, there's been worries about the financial sector so far this year. The bank stocks have really been depressed. So are we going to see more lending? It sounds like a lot of money is going out, but not at higher rates.
Yeah, so obviously margin compression is one thing, but banks clearly are in the business to make loans. We're in the business to continue to put our liquidity and capital to work. And I do think that there is a good picture out there. Capital is plenty. It's available out there. I would also comment that you're still seeing solid structures. I don't think we're getting back into that boom to bust cycle where bankers and the financial organizations are doing crazy things. You're seeing solid transactions get done for the right reasons. You see real equity in these transactions. And I do think banks are going to continue to have the ability to lend going forward.
All right, but here's the rub. If things get much better in the economy, the Fed's going to hike rates, so rates are going to go up. That's going to help the banks. But will that undermine the recovery?
Yeah, so I think a lot of it's, well, first from a market standpoint, I think some of that upward swing in rates is a natural order of things, and I think you got to look past the machinations of whether it's going to go up a quarter, this quarter, or next, and it's relatively small increases to what have been historically low rates for an awfully long period of time. I do think long term, if you take a view, is it a healthy economy? Are rates going up for the right reasons? And I do think it's a better picture here with increases, and we're still calling for 1 or 2 rate hikes later this year.
All right, thanks a lot, Greg Braca.
Nice to see you.
And thank you for watching The Street.